I think I found Robert on social media some very many years ago as young stock exchange investors, and I was excited about what I saw, the conversation that was going on. Very intelligent, very knowledgeable organization. So when I was going to launch the new app on AIB, I told my people, you got to talk to these people. These are the people who are moving in the right direction. The other thing that I'd like to congratulate them is to having taken up the challenge of investor education. That's a really big challenge we have in this country. And we must all work together to ensure that we achieve the level of investor education. If we don't, then foreigners will come and buy everything and will leave us broke, isn't it? Already we know that the Nairobi Stock Exchange is 70% foreign. What are these foreigners seeing that we are not seeing? In 2002, when we are almost at the same place where we are today, everybody doubted themselves in the stock market. When do I buy and when do I sell? Because you want to get that right point at the bottom, isn't it? Or that right point at the top where you sell at the very top and at the very bottom, isn't it? But you can never get it. That one is guesswork. But you can estimate it. Yeah? We are somewhere near our historical high, and you begin to sell. And don't be the last one to start selling. Yeah? Or we are somewhere near our historical lows, so you start buying. First of all, you've got to look at the economy. Yeah? Is the economic situation ripe for me to invest in the stock market? But not just economic growth, and which is what we've been having a challenge with over the last few years. Private sector-driven growth. The second thing you look for is a low interest rate environment. One of the critical challenges that we've had in this country over the last 5 years is that we've had a rate of interest, which we can refer to as a risk-free rate, that is significantly above the rate of inflation. Particularly for the big local institutional investors in Kenya, there has been no incentive for them to go to the stock market. They've put their money in the treasury bond and they've made money. And those who have put their money in the stock market over time have looked worse. We need interest rates a little lower in this country to create the right environment. We need to be able to assess the cyclical low. The market price to book is at its lowest. The market P ratio is at its lowest. The historical dividend yield on the market is at its highest. So you're getting dividends of 10%, 12% on shares, and the average market dividend yield is high. So you're not just looking at cyclical lows just for the cyclical lows, but you're looking at fundamental cyclical lows, okay? When you sell, don't sell everything out. Like maybe the last 3 weeks are almost an example. Yeah? Equity came from 36 to 50 in a very short period of time. If you miss that, or you start chasing it, you've missed the fundamental of the stock market. So you're in it for the long term. Increase your exposure, reduce your exposure, but don't sell off completely. What do I buy? Even if you're a speculator, I say speculate on the ones that have strong fundamentals. And how do you decide that? You've got research houses that do fundamental analysis. There is no way that you can have a better understanding of that share than somebody who has spent 3 months doing nothing else but studying that share. But do challenge those reports. Do understand them, do challenge their assumptions. Other things to look for is for innovation. And Safaricom is a perfect example of that second curve. Voice was going up. Once it got to near its peak, the second curve came in, which is M-Pesa and data. Good companies are the ones with the best owner. So sometimes companies are sold from one to the other. So for example, in Kenya today, government is not the best owner. Yeah? That's an example. So, look for those in terms of what to buy. When you find a share is going into problems and the fundamentals are becoming weak, the earlier you sell, the better. So if you can detect it early and get out, the better. as much as the fundamental analysis is done, there are still unknowns in the market. So those are the seven deadly sins. And I confess that I have been a sinner. And I know I will sin again in the future, but I hope that at least I will know when I'm sinning.
Abujani, for your growth,